Hey all, this is Dave, and today's big hairy idea is the power of being an accredited investor. So I've been talking the last few days about my book, The Cash Machine, which is now in its beta edition. For those who are looking, who are amazing editors who want to read it and give feedback, you're welcome to get an early draft. Everyone else, you'll have to wait till this fall till it comes out. But as I point out, when I was researching this book, I learned so many financial concepts I'd never heard about before, and it totally changed the way I look at money, the way I look at investments, and it totally changed the way we're handling our money personally as a family, what we're investing in, what we're doing with our money, how we're spending our money, all changed once I started researching and writing this book. And one of the things that I really learned was this concept of an accredited investor, which I'd never heard about before. And in fact, when I was speaking this past summer, a year ago, to my parents, and I think also to my in-laws, both of whom I've always considered to be very savvy financially and have a lot more investments than we do, and really put a lot more time into thinking about retirement and such than we do. Of course, they're also a lot older, but they really had planned out their financial picture of their lives much better than we ever had up to this point. Even they didn't know the concept of an accredited investor, and it really shocked me how not commonly known this was. So it's a concept I deal with in the Cash Machine. An accredited investor is basically saying there are certain classes of investments that people can't get into unless they're accredited. Think, for instance, about buying stocks in a company. When a company goes public, think about a few years back when Facebook went public. They had what's called an IPO, an initial public offering. So if you think about the words public offering, what does that mean? It's a public offering. That means anybody can buy it. So what was it before? Because before, they had lots of people who owned stock in it, who owned shares, who owned pieces of the company, but the general public couldn't buy it. So who was able to buy it back then? So basically, you had what was called accredited investors. And accredited investors are people who hit a certain threshold to the point where they're considered by the government to be savvier and able to invest in things that are a bit riskier than the rest of us can. So for instance, the reason why you have an initial public offering is people are afraid that if you have a company and you're able to sell shares to anybody, that a lot of people will hoodwink potential investors. They'll claim something is a better investment than it really is. People will throw their money in it, they'll throw their life savings in it, and they'll get nothing back. They'll lose it all. So they said, you know what? Only people who are at a higher threshold should be able to invest in things until this company has hit all of these different criteria. So when a company's hit all these criteria and they have to do with reporting requirements and accounting requirements, then they can have an initial public offering and go out to where anybody can buy stock of it. Before that, they only want select people, accredited investors buying this stock. So how do you get to be accredited? So one of the characters in this book, Amber, when she's first told about accredited and said, well, how do you think you get to be accredited? She says, well, I don't know, I guess you take some kind of exam to show that you're savvy, to show that you actually know what you're doing and therefore can be trusted to invest in properties and funds that are not open to the general public. And this guy, Vinny, who's talking to her, he laughs. Wait, you're talking about like a driver's test for investments? That's way too logical for our government. This is his response. Because the really accredited investors are people who are allowed to take risks that the government says are too dangerous for the rest of us. So you'd think they're savvier than the rest of us. They've had more education than the rest of us. They can show their competence. But it has nothing to do with that. It actually, in this case, just has to do with money. That literally, if you make enough money or you have enough money, you are accredited. And if you don't have enough money, you are not. So the threshold is that accredited investors, if they have a total of $1 million worth of assets, not counting their primary residence, because the primary residence is something that you don't want to be like, if you lose all your money, you don't want to be losing your home. Or you might say that your primary residence, in the words of Robert Kiyosaki, is really not an asset because you're living there yourself. So even if it's a big, gorgeous house, it's not actually returning any money. So not counting your primary residence, if you have $1 million, you're accredited. The other test is if you make $200,000 at least 2 years in a row, or $300,000 if you're joint filing with a spouse at least 2 years in a row, then you're considered accredited. And once you're accredited, a funny thing happens. Suddenly there's all these funds out there for handling the money of people who are accredited, for handling the money of the wealthy. And so you go into this, you can go into a hedge fund, a venture capital fund, these private equity groups. These are all things that tend to be for accredited investors only. And accredited investors just have so many more opportunities to be getting passive income because, again, as we were talking about a couple days ago, the concept of financial independence, well, I found very few people who were still struggling for money knew what the concept meant, knew what the term meant. Most wealthy people I met did know exactly what it meant. So again, people who make a lot of money are looking for people to give it to manage it, to handle it. They put it into hedge funds, they put it into venture capital groups, they put it into private equity companies, and they go ahead and they invest this money. And many of them return steady amounts of passive income. Some, like venture capital, don't. The money's locked away for a set period of time, and hopefully you get a big lump sum at the end because they've made all this money, hopefully. But other things like private equity companies might buy a giant real estate complex. So rather than you managing a single bedroom home yourself and have to deal with one tenant, you're a small owner of a giant complex of 400 apartments that has a professional management team, and you don't have to worry about anything. That money becomes completely passive now because you've got a professional management team and you've got professional fund advisors, fund managers, and they're all handling everything. And every month or every quarter, you just get a deposit of money in your account. So this is something that passive income is accessible to everybody. There's lots of ways that everyone can get it. But once you become accredited, there's suddenly a whole new range of investment opportunities that are open to you. And so it's, to me, it's one of the laws that I don't tend to like very much. I actually very much like it when the opportunities are spread out evenly. I think a lot of U.S. laws are actually favor the poor over the rich. Some have us all at an even keel. We all have the same rules. But accredited investors is one of those that actually benefits the rich much more. And it's being put in place because they feel like, wow, if people don't have a lot of money, we need to protect them. They probably don't know what they're doing, and they'll probably do some stupid things. So we as a government need to go in and protect you and make sure you don't blow it into some stupid investments. So I don't tend to like that. I like the idea that, if people actually learn about it, I'd prefer like the driver's test type thing. Okay, you want to accredit somebody, well, let's have them show you that they actually know what they're talking about with money, and then give them the opportunity to invest it as they see fit. But it's not the way things work. So it's a threshold to hit. It's something to aim towards. And really, once you hit that accredited investor level, there's a whole range of investment opportunities that become available to you that were not before.